Okay, hello there. Okay, welcome to the Stock and Profit Trading Basics course. I want to first of all start by saying congratulations to you. You've made it. You've taken that decision to become a professional trader. And what we're going to be doing today is to lay the foundation. So, what is the foundation you need to know? What are the things that need to be in place before you begin to delve into the market of trading? So, this is one of three course series, which of course you can see that that's part one of three. So, we have the stock and profit trading basics course, there is a stock and profit trading mastery course, and then there is a stock and profit trading psychology course. So today we're starting with the basics, and congratulations once again. So let's get going. Now, in chapter one, this is just getting started. So, just a little background as to what is Forex, what is trading, as it were. Now, FX trading or Forex is simply an abbreviation or the word used for foreign currency and exchange. Now, when you're going to one country, you're leaving your country and you're traveling to another country, you may have to change your currency into the currency of that country. And also when you return back, if you have the country which you visited, if you have the currency, when you're returning back to your own country, you have to change it back into your own country's currency. So essentially, Forex is simply the exchange of one currency for another, for many reasons. Okay. So commerce, trading, tourism, all of these are reasons why you may have to change, one currency to the other. As a matter of fact, even for students, if you're going to school, maybe in some other country, you may have to change your currency. So many reasons why we change currencies. Now, according to a 2022 triennial report from the Bank for International Settlements, a global bank for national central banks, the daily trading volume, according to them in 2022, was about $7.5 trillion. Now, think about that. $7.5 trillion. Now, in trading or in forex trading or crypto trading, um, that is the volume of money that gets moved around every single day. So all you're trying to do in trading is simply to just tap, just get a little of that pie, on a day-to-day basis. Now when you compare that to the stock market numbers, it completely dwarfs the stock market about 18 billion dollars per day. So compare that to about 7.3 trillion dollars per day. It's amazing. It's something else. Okay, now let's talk about the trader's graveyard. Now, most people who come into trading come for various reasons, but I can tell that most people who come as a result of something they've seen. Someone maybe, showed some affluence, some sport cars, some beautiful homes, some wristwatches, and all of those beautiful things. Now, can you get that through trading? Of course you can, but you need to have the right foundation for you to really go far. Now, the trader's graveyard. Now, beginner traders, they come into trading just super hopeful. There is the hope of, oh, when I start trading, I want to buy this house, I want to buy this car, I want to do this for my family, I want to do this for my sister, my brother, my uncle, my auntie, my dad, my children, all sorts of reasons. There's that hope in beginner traders. There's that excitement, coming into trading. I've seen this person do something like this and I want to become them. I really want to do whatever it is that deep down to have that life. And then you begin to have what we call the break even dance eventually when you start trading. And what that simply means is you make profit, then you give it back to the market. You make profit, you give it back to the market. There is no consistency of growth. Now, you're winning and you're losing with no end in sight. That's the break even dance, right? Now, a lot of people after that run away from trading. Okay, and it happened with me. If you've watched any of my, I did an interview with Funded Next, and I did mention a little on my experience how I came into trading. And you would see that after I took a loss, after taking some money I borrowed from my sister at the time, I so ran away from trading. I was like, nope, this is not for me. I'm not going to do this and all. And the reason was simply because I didn't really have, a foundation in trading. I had just read a few, documents here and there on trading, and then I just felt I could just borrow money, put in the market, just to do this and do that, to trade, and then maybe buy this and buy that. So that's the typical, mindset of beginner traders that come into the market. So a lot of people run away after a while. But my hope for you is that you're not going to run away. And the stock in profit course is going to do that for you if you stick around and get to the end of the program. Okay? Now, and then some people just quit completely. Okay? So some run away and come back. Some people just quit completely, unfortunately. Now, on the other hand, we have patient traders. Okay, now patient traders are those who go through all, the motions of failure and rising, and failure and rising, the emotional roller coaster, of trading, and eventually something begins to change. Now, these patient traders or profitable traders, face and overcome their fears. Eventually they learn. Okay, they unlearn all the things that, they came into the market with. Oh, I'm going to buy this in the next 1 month, I'm going to buy this in the next 2 months. You have to unlearn all of those things, by the time you begin to push forward to become a profitable trader, and then you relearn. Okay, and then grow, and then you win. Now, this will take some time. For some people, this may take anything from 1 year to 2 years, 3 years, 4 years, 5 years, because there's so much you have to unlearn. You have to unlearn your psychological makeup. You have to unlearn your normal propensity to avoid, hurt, or to avoid something that's going to make you to kind of lose whatever you consider valuable. You have to unlearn all of those things you've been learning from when you came into this world. So until that happens, you unlearn, you learn, you relearn, and then you begin to see consistent growth, and then you begin to see wins. Now, of course, that is when you stay stuck in profit. Okay, now that is the trade of graveyard. Now let's talk about something else. Now, what is the stock in profit offer? The stock in profit offer is this: there's something called the 4 stages of competence. Now, that is the consistent trader's journey. Now, everybody starts at level 1, which is, ignorance. Okay, now you come into the market, you're ignorant. Okay, you've seen something that somebody said you're trading, you're driving supercars, you're showing nice cars and nice homes. You've seen all of that, but as you come into the market, you're completely ignorant. Now, at this point, this is where everyone starts from. So you have performance on the y-axis, and you have time on the x-axis. And what you discover here is that as you begin to advance, so at level 1, ignorance, you have what is called unconscious incompetence. You're not even conscious of it. You don't even know that you're incompetent. Your intuition is wrong. You're unaware of the skill and your lack of proficiency. So you don't even know that you don't have the necessary skill to succeed in the market. But then you make progress. You go to awareness. Now, at the level of awareness, this is where you begin to have what we call the conscious incompetence. You know that you don't know. Like, you don't know. You don't know this thing. You don't have the right strategy. You don't even know how to enter the trade, how to leave the trade, how to manage the trade. There's so many things you don't know. Okay, but now you're aware of it. Now your analysis most of the time will be wrong. If the market is going bullish, if it's going to, a lot of people buying, you're analyzing there's supposed to be a sell. So your analysis is pretty much wrong. Okay, you're aware of the skill and your lack of proficiency. That's what happens here. Now, from there, you proceed to learning. Now you begin to learn. You've discovered that, oh, you know nothing about this thing, you're conscious of it. Now you begin to learn. Okay, and this is the level where you begin to have what is called the conscious competence. Okay, now you have the right analysis. When you analyze the market, it's right, it goes in your direction. You may not necessarily partake in the trade, but it goes in your direction. Your analysis is right. You know how the market should work. You're beginning to have a grasp on how the market works. Now you're learning, and you're able to use the skill with much effort at this time. And then from there, you proceed, to practice. Practice, you continue to develop yourself, you continue to refine your skill, you just continue, to get better and better and better. And then after that, you now get to the level of mastery. And that is where you have unconscious competence. Okay, now this is where your intuition is right. You know where the market is going. You just have an understanding. You can't tell it, but it's just there in you. You know it, you understand it. So here you have the skill, you have the knowledge, you have, the will to also, become profitable in the market. So this is where you use the skill without even thinking. You know your trade setups and can execute like a robot. So you know it. When you see it, you can never unsee it. So this is the level of mastery. And these, ladies and gentlemen, are the four stages of competence. So you start from unconscious incompetence, conscious incompetence, conscious competence, and then unconscious competence. You just know it even without you, thinking about it. And this is the trader's journey. And I want to tell you something, that the stock and profit offer is going to take you from level 1 unconscious incompetence to level 4 unconscious competence if you were able to go through the program. So this is the basics. You're going to have the master's course, the stock and profit trading mastery course, and then the stock and profit trading psychology course. I can tell you for certain that if you're able to go through the entire program, you will get to the point of unconscious competence. Okay, so that is that for that. Now let's talk about fantasy versus reality. Now, the fantasy that a lot of people come into trading with is, I'm gonna become a millionaire in 1 or 2 months. Okay, now I'm just gonna put a little work and do some other thing, and then I'll get high returns. Some other persons come into market with a get rich quick scheme, mindset, which is just, I'm just gonna go there, make some money, buy the cars I saw somebody flaunting, on social media. That's just fantasy. Okay, now what is the reality? You can become a millionaire in 2 to 5 years. That is possible through trading. Okay, but you have to understand that you have to put in the work daily. Now, if you put in the hard work, you will definitely get high returns. Okay, and that is the reality of trading. You put in the work, you will definitely get high returns. It may take some time, but it will come. Now, you also have to understand that trading is a get rich slow scheme. There is nothing like get rich quick scheme in trading. It's a get rich slow scheme. If you see some persons who are just, getting, or just, risking a lot of amount of money, and when they make profit is large, and when they take losses is large, that's a roller coaster that wouldn't allow you to grow in the long term. You have to think strategically. So trading is a get rich slow scheme. Now, even the top hedge funds in the world, sometimes don't have the returns. There are a lot of novice traders come into the market and they want to make, you want to make 50% in a month, 100% and all of that. It's usually not realistic. Okay, now it takes on average 4 to 7 years to get a college degree. But many want to become pro traders in 1 or 2 months. How realistic is that, right? Um, that's not a reasonable way to come or to become a professional trader. You go to school, you spend 4 to 7 years, and you acquire a degree, and sometimes you come and you're earning salary that is below what you're worth. Okay, but this is trading that can transform your financial situation, and a lot of people don't want to give it the time. Well, I trust that's not going to be you. Now, the stock and profit course essentially brings you to that level of understanding all you need to understand for you to become a professional trader. And that's why this basics is just laying the foundation. We're not talking about trading here live yet, practically. We're simply just laying the foundation because this is important for you to know and understand. Now, what if when you start trading, now a lot of people sometimes take the money and they put into a broker. But compare this now. You have, for example, let's say personal account, and in that personal account, let's say you have like $3,000 with a broker, of course. Now, if you make 10% on that $3,000 in a month, that's $300. Okay, but think about what we now have with prop firms, that give you a certain amount of money. Of course, you pay a fee, and then imagine you have $300,000 account, and that $300,000 account, you make 10% of that. That gives you 30,000. Ladies and gentlemen, that's a lot of money. Okay, by any standard. Now that is the power of trading, and that's what trading can do for you. So, and that's why it's very important. First, I want to say congratulations to you that you decided to invest into this course, because this is going to set you up on the right mindset and place you in a pedestal for success. So, with personal account, you can make profit, but most often than not, you may not put a lot of your own money into the broker to make that money. But with a funded account, you pay a fee and then you get a large account, and then a little profit, the same profit of 10%, will give you much more return. And you can, by the way, you can think about scaling that. Okay, not just 300,000. Imagine you're managing multiple funded accounts, across, maybe different companies. Okay, it can become a large amount of money. Now, let's do this. Now, Forex trading volume. Okay, I had mentioned earlier this stats. I don't have the year here, but you can see the stats are showing 6.6 trillion. I'd mentioned 7.5 trillion based on the 2022 data. And when you compare that with the stock exchange market, you can see that it completely swallows it. And all you just want to do, it's for you to just take a little profit out of that, $7.5 trillion that's been traded on a daily basis in the FX market. Now, key information that's very important for us to understand. Now, a brief history of Forex. Now, in its most basic sense, the Forex market has been around for centuries, right? Because you've always traded by barter, you've always changed something for something, changed money and all of that. Now, people have always exchanged or bartered goods and currencies to purchase goods and services. However, the Forex market, as we understand it today, is a relatively modern invention. And it is so because think about the fact that, for example, today, for example, you're able to do all of these things with your phone. You're able to change currencies from one currency to the other with your phone, your laptop, just online and all of that. That hasn't always been. So the way we have it today is relatively modern, a modern invention. Now, after the Bretton Woods Accord began to collapse in 1971, more currencies were allowed to float freely against one another. The values of individual currencies vary based on demand and circulation and are monitored by foreign exchange trading services. Okay. Now, commercial and investment banks conduct most of the trading in Forex markets on behalf of their clients, but there are also speculative opportunities for trading one currency against another for professional and individual investors. And that is what we do, particularly in trading effects. Now, just continuing from that, there are two distinct features of currencies as an asset class. Now, first, you can earn the interest rate differential between two currencies. If you're holding one currency, against another, you can earn interest rate differential. You can also profit from changes in the exchange rate. So if the exchange rate goes up, you make more money. If it goes down, you lose money, right? Now, as an investor can profit from the difference between two interest rates in two countries' economies by buying one currency with a higher interest rate and shorting the currency with the lower interest rate. Now, in trading, you see that a lot by the time you begin to trade, it's called swap. Sometimes you see that if you're trading and you leave your trade overnight, you may get the swap fees, and sometimes it can be a plus, sometimes it can be a minus, depending on the pairs. Now, prior to 2008 financial crisis, it was very common to short the Japanese yen and buy British pounds because the interest rate differential was very large. Now, this strategy is sometimes referred to as a carry trade. Okay, now still on some key information. Now, the Forex exchange, also known as Forex or FX, is a global marketplace for exchanging national currencies. Now, because of the worldwide reach of trade, commerce, finance, Forex markets tend to be the largest and most liquid asset market in the world. Now, currencies trade against each other as an exchange rate pair. Okay, has exchange rate pairs. For example, you have the euro dollar, which is a currency pair for trading the euro against the dollar. Now, one unique aspect of this international market is that there is no central bank, no central marketplace rather, for foreign exchange. So rather, currency trading is conducted, electronically over the counter, OTC, which means that all transactions occur over computer networks among traders around the world rather than on one centralized exchange. Okay, now that is why we're able to trade, with our laptops, with our phones, because we simply have the internet, and now we can trade over the counter, just from the comfort of our home. Now, market participants use Forex to hedge against international currency and interest rate risk, to speculate on geopolitical events, and to diversify portfolios, among other reasons. Now, it is always the case that, for example, if it happens that there is maybe some unrest, in some country, the currency of that country is going to take a hit, and that will be the time to begin to sell heavily. For example, when there was Brexit, the British pound, nobody was sure what was going to happen, and it was an opportunity to just sell and sell and sell and sell the British pound. Okay, now the FX market is open 24 hours a day, 5 days and a half days in a week, 5.5 days a week, right? So it usually opens on Sunday, going into Monday, and then closes on Friday. Now, these currencies, or the FX market rather, is traded worldwide, from the financial centers of Frankfurt to Hong Kong, London, New York, Paris, Singapore, Sydney, Tokyo, and Zurich, across almost every time zone. So, and every point in time, the FX market is being traded by someone somewhere. Now, know that you often see the terms FX, Forex, foreign exchange market, and currency market rather. These terms are synonymous and all refer to the Forex market. Now, while many investors, particularly many in Western economies, may be more aware of equity and stock markets, Forex plays a key role in the constantly evolving relationship of global trade. So even if you don't know it, you've probably already placed a forex trade. If you've traveled to some country, you most likely have partook in a forex trade. Now, have you ever withdrawn money from an ATM in a foreign country, in a foreign currency? Well, that was a forex trade. If you've flown into an international airport and seen the airport kiosks with flashing rates, those are bids and offers to place, an FX trade. So you will see, you most likely have engaged in FX, Forex in some way, shape, or form. Now, how do you become a successful FX trader? Now, this is straight to the point, sincere guide on how you can become a successful FX trader. Now, number one, you must learn about it. Okay, so the Paruto course, that's the stock in profit trading course, gives you opportunity to learn, and you're doing that just now. This is the basics. You will have the mastery. We're going to be going into the details, analysis, chart analysis, and all of that, and then the psychology course too, which eventually will solidify all your learning and bring everything together for you. So you must learn about trading. Okay, now you also must view trading as a business and not a hobby. If you view it as a business, you manage your risk. If you view it as a business, you will not be rash, you'll be patient. So you have to view it that way. And then you also have to practice, practice, and practice. As they say, practice, practice, practice makes perfect. So if you know now you want to become a successful FX trader, you have to practice a lot. Every single day you must practice. Now you have to develop strategy and the trading plan. Develop your own strategy. In the mastery course, I'm going to be sharing, the details of the stock and profit trading system with you, but you may also decide to go on and modify it a little bit. Okay, so you have to develop your own strategy and also the trading plan. We discussed that also in the mastery course. You need to also have a trading plan. You must have a trading plan that you stick to, that you follow, for you to be a successful FX trader. Now you also have to work on your psychology, and that's why we have the psychology course, which will help you develop your psychology eventually. Now you also have to focus on the process, not profit. Okay, the process, not profit. What is the process needed for you to become a successful FX trader? Not profits. The process eventually will bring the profit. Now you have to also develop a solid raw competence by becoming a student of the market. You have to continue to learn every now and then. There is no time where you say, oh, I think I don't need to learn again. No, That'll be completely wrong. Now, always use a stop loss. When you begin trading, if you don't know this, don't worry. We'll see that in the mastery course. But always use a stop loss. It's risk management. So if I'm going to a trade and I'm saying I'm willing to lose $1,000 to make 3,000, then I must make sure I put a stop loss so that if for whatever reason there's um, maybe there is some sort of high level news, red folder news, high impact news that comes out, you don't take unnecessary losses because you refuse to put stop loss. Now, you must also invest your profits. So if you're making profit, invest it in different ways, into real estate, into something else, just invest the money. Don't spend the money because you're now making money in the market. Strategically invest. Now, always risk what you can afford to lose per trade. So you must always risk. Personally, I advise that risk anything from 0.25% to 1% of your account per trade. And of course, in a day, you can decide to say, in a day, I'm only willing to lose about 1%. That gives you room for you to be able to recover just in case you take losses without taking any irrational decisions. Now, you must rinse and you must repay. Okay, everything I've listed here, this is what it takes for you to become an FX trader. You can grab it, screen grab it, you can print it out, you can put it somewhere, but this, ladies and gentlemen, is what you need. Now, let's talk about the right mindset, okay, and managing expectations. Now, this is very important because if you don't have the right mindset, then your expectations will completely be off the chart. Okay, now our minds, are gifted with pain avoidance mechanisms. Most of the time, when you see something that wants to hurt you, what do? You shut off, you run away from the place. That's what our minds are shaped, over centuries, over decades, over years, to kind of, that's how we're shaped to kind of deal with anything that will cause emotional suffering. Now, you have to understand that because this is part of our human makeup, some subconsciously, when you come into trading, you discover that you're always afraid of losses. You don't want to lose, and that's what leads to many people, what they call revenge trading. So somebody takes a loss, but that is the limit of your loss for the day, but you still want to take another one because you want to make sure you recover it. You want to, and that's what ends up, people don't have anything, to look back on. So pain avoidance in trading is different only in the sense that it deals with emotional pain. Okay, now you usually rationalize, make excuses, belittle the significance of conflicting information, and sometimes even straight up lie to yourselves just to be good. Now, learn to manage your expectations. Okay, now as in life, trading on the forex market or in the forex market will see you anticipating what will happen and expecting situations to pan out how you predicted. But you must learn to manage your expectations. Don't always assume what the market is going to do if it's not in your plan. It has to be in your plan, then you execute it. Okay, now trading emotions are the enemy of all successful traders. There's no single trader that will tell you that, oh, I just, became a successful trader without undergoing any emotional strain, the roller coaster of ups and downs. No, every single professional trader, successful trader, you don't be sincere with you, they'll tell you that trading emotions are the enemy, really. So now they will make you give up when the trade doesn't go your way, when you thought it would, or rush back into the market when the trade works out. So many things. Now, our emotional response to a situation is really based on what we expect to happen in the context of the environment at the time. When it works out, we feel good. When it doesn't, we feel bad. When you learn how to trade, you discover that all of that does not matter at all. You become stone cold. Whether you're winning, whether you're losing, nothing matters. Just follow the process. Okay. Now, expectations are a natural part of our human makeup, that you simply cannot get rid of. That's the truth. The key to them with forex trading is managing them successfully. You can't say, oh, because I'm a forex trader, I want to shut off, my emotions. No, but you need to learn how to manage them successfully. Now, one of the main things to understand is to not set unrealistic expectations around your trades. Now, using unrealistic expectation as a trading strategy could bring major pips each time into your account, but it's usually very unlikely to work out successfully long term. So you need to have a fixed maybe amount of money you want to make in a day and stick to it. Okay, it helps with your psychology, it helps so much. Now over time the chances are you will lose most of your trade, if you have unrealistic expectations and begin to feel frustrated and upset. Okay, now let's deal with some fallacies, some lies and biases when it comes to trading. Now, the gambler's fallacy. Now, this is people taking in by the gambler's fallacy believe past events affect probability of something happening in the future. For example, if a coin is tossed and the heads come up 8 times in a row, they will think that on the ninth time it's more likely to be the same, but the odds are still 50-50 for heads or tail. So the fact that you took a trade and it was profitable does not mean that your next trade will be profitable. And the same way also that you took a trade and it was a loss does not mean your next trade is going to be a loss. Okay, so you have to understand that your previous events do not always affect the current or the future event. So this is something you need to understand. Now the gambler's fallacy is the gambler believing that, okay, what I did yesterday I'm going to do today, and that's usually just a fallacy. Now we also do have the my turn fallacy. This is where people say, oh, this is my turn, to make profit in the market. So a branch of well-known gambler's fallacy, the latter poses that a long run of one outcome, such as a string of heads in a row, when tossing a flow, makes increasingly likely the opposite result to make up for all the heads. Of course, the coin has no memory and no consciousness that it is supposed to compensate for all those heads, right? So the market has no business knowing whatever your state is, and you cannot say today is my turn, I must make it at the market and all of that, and then you begin to take irrational decisions. You have to watch that. Now, the my turn fallacy applies this to the individual trader and suggests that the market is obliged to make up for a sequence of poor outcomes with better ones. The market has no obligation to do that, and this is something you have to watch out when you're trading. Now, we also have the winning streak fallacy. This is where, the person just believes because I took two trades yesterday, it was green. I took two trades before yesterday, it was green. And now everything begins to point the trader to that belief system that, okay, whatever trade I take, it's gonna win. And that may not be true. So the winning streak fallacy is also something to watch out for. Okay, now let's also look at the being owed fallacy. Now, this particular delusion can seriously damage your wealth. Okay, you believe the market owes you and all, and some people can be very aggressive with that. Now, there is the idea that cutting losses now would make more likely a turnaround in performance. What may be thought of as darkest hour is before the dawn sub fallacy. There is the notion that it is wrong to walk away from a strategy in which so much has been invested, already in. Okay, now in summary, as we conclude, it is not wrong to see a trade go the other way than you thought it would. Okay, this is normal part of trading. Okay, things will go your way, things may not go your way. Okay, you have to also give yourself time. Give yourself time to grow. Don't say in the next 2 months you just come in trading, in the next 2 months you want to become a millionaire. That's unrealistic expectation. So give yourself time. Okay, now trading is psychology. You have to manage your mind, you have to manage your expectation. And then you will put yourself in good stead to become a profitable trader. Now, don't rush the process over profit always. Now, be patient with your progress. It may take time depending on your makeup. Some persons can easily overcome, the fear of failure. Some persons may take a while. So be patient with your progress. Do not quit. Winners never quit and quitters never win. At the end of the day, nobody cares about quitters. Everybody wants to be a winner. So make sure you continue, you stay true to yourself until you win. Now, right, with consistency and grit, you will definitely succeed. Okay, now let's look at this. Just a second. Not sure why that is doing that. Okay, so how wealthy can you become? Right, this is a question a lot of people ask. How wealthy can I become? Very interesting question. I'll tell you something. In trading, you can become super wealthy. I've already given this illustration earlier, and this is the reality of what you can become. Okay, with trading, you can actually make a lot of money, but you need the right skill, the right mentorship, and the right environment to strive. And that's what the stocking profit course or mentorship is going to provide you. Now, you can't get rich, trading definitely. And yeah, so it is definitely possible to become rich through currency trading. However, it cannot happen overnight. That's very important to note. You cannot become a multimillionaire overnight. All traders lose money at some point in the market. So trading is not for those in debt or the unemployed. And this is very important for me to mention. No doubt sometimes some things may drive you into trading. And some persons may be unemployed, and that's what really drove them into trading and become profitable. Okay, but advisably, if you can't get a job, advisably get the job so that your mind is off what you're making from trading. Okay, so get a job if you need to get a job, but eventually you can become really rich. Now, Forex is not a get rich quick scheme. I've mentioned that before. It's a get rich slow scheme, and you have to understand that. Now, in this time and age, we have prop firms that give money. After you pay a certain fee, you can decide to go through the prop firm route. So the prop firm route. So instead of saying put in $6,000 on my account, I can go buy a prop firm for maybe $50, $60, and then I get that amount of money, and then I make a profit. I pass the challenges, make a profit, and I keep the money. So capital today is not the problem. Skill remains the major problem for so many people. Now, all traders lose money at some point in the market. This is very important to understand. So, if you have a trader who says, "Oh, I don't lose money," no, 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 just run away from them. Okay, that's not true. That's not even a trader. No trader is going to say that. So, the truth is that even expert traders with years of experience still encounter periodic losses. I still encounter periodic losses, and it happens. Okay, so you have to drill this into your head that there are no shortcuts to Forex trading. It takes lots and lots of practice and experience to master, and I hope you really put in the work. Now, there is no substitute for hard work, deliberate practice, and diligence. Practice trading on a demo account if you can, or get some real money, little money into a trading platform, not really a broker, and try using that, because that's going to train your emotions. You're now going to see yourself for what it is. Now, trading is not for those in debt or the unemployed. I've mentioned this before. Clear your debts, okay? It's very important that you clear your debts. Get another job if you have to get another job while you continue to learn and continue to develop your skill, okay? This is very important. Now, most people lack the discipline to stick to a diet or go to the gym 3 times in a week, okay? But they want to become profitable. Now, by the time you become profitable, you will see that trading will completely transform you and make you a disciplined person, okay? Now, trading Forex is not a get rich quick scheme. I've mentioned this before. If you want to learn trading, Forex trading is a skill that takes time to learn. Very important description here. Forex trading takes time to learn. Give yourself time. Okay, so skilled traders can and do make money in this field. However, like any other occupation or career, success doesn't just happen overnight. It takes time, and you have to know that. Okay, there are no shortcuts to trading. You need to practice and practice and practice until you master the market. Okay, now, how do you get prop firms? There's so many examples. I believe in the description you may see one, or just search online. But I usually recommend the Funded Next. I have maybe a link downstairs, in the chat, in the somewhere in the description section that you can click, and go get them. At the time of recording this video, I have an account with them. I've received payouts with them, so they're reliable, and I hope they continue to be that way. So just click the link, and then you can go there to get an account with the prop firm. Now, prop firms basically just offer you capital to trade large amount of money for just a little fee, and then you can trade the amount of money, and then if you make a profit, you get your application fee refund, and then you just continue to make profit on the account. So this the prop firms have come to stay at the time of recording this video, so I'll encourage that you leverage them, and you use them to really make progress. Okay, now the knowledge you obtain from trading, it's very valuable. Okay, now considering their own money is at stake, that's now the prop firms. Providers will usually do everything in their power to ensure you succeed. That's in the sense that they may want to see that you succeed, because if you make money, they actually make money eventually in the market. Okay, now what prop firms provide you is greater guidance. You'll able to have that guidance because they have all these objectives. Don't risk more than, yeah, lose more than 3% in a day, and all of these objectives can really help you to be disciplined. And they also offer mentorship in some cases, and then coaching in some cases, and even more. Okay. Now, subprompt firms include like FTMO, Funded Next. I'm calling those out because at the time of recording this video, they're reliable and you can also use them. Just check the description section and you're free to use them as appropriate. Now, common questions people ask with respect to getting funded and prop firms. How much do funded traders make? Well, you can make anything, you know, from $60 to $100 to $200 to $1,000,000. You can make anything depending on your skill level. Now, can I become a funded trader? Of course you can become. Just go follow the link in the description section and act on it. Now, what is funded trading? Of course, I've explained that. Funded trading is simply just a company giving you a large amount of money based on the fee that you pay, and then if you're able to pass your challenges, it becomes your account. You trade it, you become profitable, they give you the money. Okay, so how do funded trading accounts work? Well, how it just simply works is you pay money, you get the account, you pass the challenge, maybe one phase, two phases, and then you get the account. And when you make a profit, you share the profit 80 to 20. You keep 80, they take 20, or 95, to 5. So that is essentially, how it works. Now, your trading powerhouse. Your trading powerhouse is simply just this screenshot that you see. It should also be in the description section somewhere that you can also use to begin to record your trade. I want to believe you fully have access to this later on in the course. And also, if you're watching this at the time, maybe when the Stocking Profit app has been released, which is going to be an awesome, software or web app where you can record your trades, you can see your strategies, you can monitor so many things, you can stay accountable, essentially. So this is something that you may see. So yeah, so the Stocking Profit Powerhouse is just for journaling your goals, your trading plan. You can back test, you can forward test, put so much information there, your setups, your entry models, and additional resources that can be of help to you. So if at the time of you watching this, the Stocking Profit app is ready, you'll see it in the description section, where you can go, subscribe to the Stocking Profit app, and you get awesome charts and really awesome functionalities to help you become a professional trader. Okay, so with this, I want to believe we've been able to go through all that we need to go through with getting started in trading. And I can't tell you how excited I am, to see you become a professional trader. So I'll be seeing you in chapter 2. So remember, stay stuck in profit, and see you in chapter 2. Bye-bye. Cheers.